G'day, Petty from PPA, and welcome to this week's show, The Property Investment Guides, the only place to be for fair income facts, figures, and flaming hot spots. Look, today I want to drill right down on the most important thing. Stop investing if you're just jumping in and buying anywhere, okay? Stop investing on emotion. Stop buying around the corner from home, and stop walking into a sales office and getting sold on hype in an apartment. I mean, stop buying apartments in general if you can. There's much better investments out there, and stop, just buying without actually doing the research, the due diligence, and getting the right property for you. Because look, you must get maximum returns, and that is maximum cash flow, maximum tax benefits, maximum capital growth, and maximum tenant demand. I know we harp on about this over and over and over again, but it's so important. Why is it so important? We've all got from where we are today until when we like to stop work, and that time frame, your time frame, is different based on your personal circumstances. So there's no doubt that we must make sure we're getting results. Why is it so important? Because when you get results from your first property, you can then duplicate to buy a next property, and then maybe again to buy a third property. Depends on how many properties you need to get the shortfall you have right now to achieve the figure you need. But there's no doubt, if you don't get results and you sit there treading water and going nowhere, then you don't get the results, you can't duplicate, you're not getting any compound capital growth, and therefore you're not getting to your end goal. And that's so important. People, you invest because you want to climb up the property investment ladder so you can have financial security sooner. Is that right? Yes or yes? 100%. So you must make sure you optimize that first investment, second investment, or third, depending on how many you want and need to get that shortfall. Everybody has a different time frame. From where you are today, could be 10 years, 15 years, 20 years, 30 years, whatever that is for you. But you need to optimize that time. It doesn't matter how long, even if you're a young person with seemingly endless time to get there, if you don't get results, you just can't duplicate sooner, because no doubt, whatever age you are, you want to stop work sooner. Everyone we talk to, there's only like 14% of people actually love their job. The rest want to stop work as soon as they possibly can, and have financial security, because you need the money, the funds, to last you at least 23 years. That's if you stop work at 60 with the average age expectancy of 83. So you must get those figures, you must get it right, and you certainly have to get the results you need. Now, talk about results. I'm going to bring Tony on now, and we're going to talk about some of our clients' results and just using our proven formula and why it makes such a difference to your outcome. Thanks, guys. Thanks, Tony.
Thanks, Peter. Hi, everyone. Look, everyone wants real results. They want to accelerate their return on investment, accelerate their cash flow, start replacing their income, and ultimately also, one of those things a lot of people actually forget is writing off the maximum amount of tax, how you do that. Let's look at what we've been able to achieve over the last, 10 odd years, but most of this I've picked in the last sort of 7 years. And these are real results, proven results, and these are averages, guys. I haven't picked the best results, I've just picked the average that we've done for hundreds of clients by getting it absolutely right and getting into locations before the herd, before everyone else even thinks about getting in there. And there's a lot of reasons economically we know it's going to work, okay? And this is what's highly achievable. This is an idea for you, right? Sydney, 2012. Why did we get in there? Massive infrastructure coming, creating thousands and thousands of jobs. Then we look at the right location where you're going to benefit the most but pay the least. So the example was, we've got John and Ann that got into an area in Sydney for $550K, brand new home. We built it for them in Sydney back in 2012, when most people said, would you be promoting Sydney right now? You shouldn't be going into Sydney, should you? I mean, Sydney's been flat for years, some 7 years. And we went, no, it's all coming. The timing's crucial. So what's the outcome today? $840K. We've got John and Ian are up their property's valued $840K. Guys, that's almost $300,000, right? And that's also taking into account that it's come off about 6%, right? These are highly achievable results by getting timing right, getting the microeconomic factors right. Hobart, 2013, they said we're even more mad promoting Hobart. There's a lot of companies out there that say they promoted Hobart at the right time in 2015-16. Guys, we were there in 2013 when the prices were 80 to 100 grand cheaper, okay? 2013, Margaret and Tom, got in at $305,000 for a standard 4-bedroom home, double garage, double bathroom, right? Today's value, $515K. So you're looking at over $200,000 in that time period. These are highly achievable results, but not what the mainstream Australia is actually achieving, because they're getting in at the wrong time and looking at the wrong micro factors. Peter's going to talk a lot more about that in a minute. I'm just here to talk about the results for now, and I'm going to talk about the exciting stuff, where the next property location is. You should be investing in right now to even gain better results than this, okay? Number 3, real case study, Melbourne, 2014 again. What are you looking at these blocks of dirt, the paddocks that they've hardly developed? We looked at the micro best locations for the best price, for the best long-term gain. Guys, here's the example, right? 2014, Shane, single dad, bought into this location. Price point, $396. Value today, $635 today. I mean, great results in a short time period. And all these properties, by the way, are all way cash flow positive. They rent really well too, because they started at the right time and they gain the acceleration of rent going up as well, right? Got in at the right time to maximise everything, maximise their returns. We look at the Sunshine Coast, 2015. Everyone says the same thing. Why do you guys invest in those areas and promote and build in those areas now? Because we know you're going to maximise your growth, maximise your cash flow, maximise and accelerate your return on investment, and enable you to retire sooner and duplicate sooner to build a portfolio of properties successfully, right? It's about your timeline. We don't have time to waste, right, as Peter said. We've got to get this right. So, Derek and Shane, 2015, this time was a dual occupancy, right? We got in at the right time. We got discounts on land too, in most of these cases because of timing, right? 540K, dual occupancy, 3-bedroom, 2-bedroom, 3-bedroom one side, 2-bedroom the other side. 740K today, guys, 740K. And I've just rounded these figures up and down, right? So to make it easier to digest. 740K, so it's gone up 200,000 in that time period. But you know what? It rents its head off. Rents well over $800 a week. So cash flow is really good from a dual occupancy as well. So that's why I pointed out that one. It's a little different. Brisbane, 2016, Mary got in at the right time. The right time in the demographic location where they were pumping huge amounts of infrastructure, creating jobs, putting a new railway, new private school, all these things we look at, right? And what happens? It's gone up to 645,000 in a few years, guys. Just a few years. Timing is crucial, but you must get in at the bottom of the cycle, all right? Too many Australians, over 70%, get in when everyone's talking about it. Too late. Peter's going to talk more about that in a minute. But you've got to start listening to facts and what works. You've got to start getting smarter. Brisbane, 2016. Sorry, I've talked about Mary. Gold Coast. Peter. This is Peter that you just listened to a minute ago. Right? My business partner. He got into the Gold Coast. There was about 4 other clients did the same thing or better. 2016, it was late 2016. 500K value. His price point was 500K. Today's value is 680. We've only just had this one valued, so we know this is spot on, right? In just a few short years, guys, all right? And this is not unusual. We buy and build where our clients do, okay? Nothing unusual. Some of our clients get way better deals than us. Honest to God, it's about timing, it's about economics, about the drivers. Peter's going to talk about that now, and the number one thing you must get right. This is not unrealistic, guys. We're doing this with hundreds of clients today, all right? And we're talking about the next city that's about to go bang, or is starting to go bang right now and boom, and it's going to do so for years, all right? But it's not where most of you would think. That's the problem. You've got to understand the fundamentals. Thanks for listening. I'm going to come on in a minute and talk about where that city is. Peter's going to talk about the number one thing you should know.
Thanks, Tony. That's right, guys. I hope you found that exciting, because no doubt it's exciting for us, because we do this for results for our clients. It makes us feel great. We wake up every day with a smile on our face, knowing we're making people happier, changing people's lives. That's why we do this business. So let's get into this. Just give my back for a second. Quick quick drawing, sorry guys. So look, there's no doubt timing is the key. We harp on about this over and over and over again, how important timing is, and it's not just for the growth. And we talk about buying at the right time. You know, where most people in our space are talking about, all they care about is selling property, so they're selling you where the story sounds good, and unfortunately, you've already missed that strong growth Tony's talked about. You know, you must get that strong growth first, and it's not only that, when you buy at the right time of the property cycle, instead of here, or up here where a lot of people Australians buy, you know, most companies in our space are recommending locations around here. And look, our clients, these locations here are there now. Look at the Sunshine Coast, Brisbane, Gold Coast are probably a little bit higher, but these places have still got all this room to grow yet. We've had great results, but they've got more room to grow. Unfortunately, so many people are still going in and buying in some of these locations now, and they'll get some solid growth still, you know, over this growth period, but they're not going to get the full growth cycle. And it's not only that, when you get in, Tony has touched on it, when you do get in at the right time, at the very start of the property cycle, we can go in there, we identify the best location within those locations. We talk about, it's not just identifying, you know, these cities, it's where are the micro factors of that city, the growth drivers. We look like a bit like a target. You know, where is the best city? Where's the best suburbs? Where's the best developments, estates? Where's the best streets and the best blocks and the best house? You know, where is drilling right down to that micro? Because that makes a massive difference. If you know yourself, if you're here in Canberra or Sydney or Melbourne or wherever you are, wherever you're living around the country, you know that if you invest, you know parts of your city has stronger growth than other parts, and that's what we're looking at. On the ground research, we don't recommend anywhere that we haven't been ourselves, kick the dirt as we say, and run our matrix that's proven over and over again to get it right, to make sure we drill down that exact location within that city, get those micro factors right, because that makes a big difference to your growth over time, and for your rentability, and for your future resale, all those sort of things give you a safety net for your investment, plus your maximum returns. So again, I can't harp on enough about how important this is, because here, as I say, if you buy at the right time of the property cycle, you can possibly buy again and maybe again in that sort of 5-year period, where this person here has bought at the top of the cycle, they've gone almost nowhere in 5 years' time and wasted the 5 years of your life. Remember I had my little drawing here before, you can't afford to waste that time. We can't harp on about this enough, because you do have a limited amount of time to build that wealth, to stop work. So you need that result so you can. Again, this would be another city, so you got a diversified portfolio at the start of the next property cycle. Again, excuse my drawings, but you get the picture. You want to buy at this right time. Again, many companies in our space put you into places here now, and they're not just in that city, like here we are, we're talking about Sunshine Coast and Brisbane, is at that sort of time frame now, but where's the micro macro? It's not cheap, doesn't mean cheap and cheerful doesn't mean strong growth. So you can buy a house and land for sub 400k, but it's in, excuse my language, it's in Shitsville. You're not going to get the results you're after. Now you must identify where are the best locations, and where are the best locations for rental demand and cash flow and for strong growth. There's no doubt that is key. So we must get that right. And then from there, you can duplicate and go again, rather than here, they might get some growth, it'll flatten out for a while, but they're still not making the same returns. So they're not going to fast track. We're about fast tracking your way up the property ladder to financial security, financial independence, financial freedom, whatever you want to call it. But importantly, really take this in today that you must get it right, because I said not only at getting it timing do you get the right time frame for the strongest growth. We can screw the builders down on price, so we get the best price for our clients. We get rebates on land, so you make money off the land when you buy it. You get all these factors driving for you. You get you get development uplift through the developers keep pushing up prices. You can choose to see what locations are the best locations for growth. You've got power. We have power when we go into there, so we pass that power on to you as the investor, so you get the best results. So I'm going to bring Tony back on now. He's going to drill down on where is this number one location in Australia now, and that you can certainly take advantage of if you're ready to invest in the now or in the next few months. Thanks, Tony.
Thanks, Peter. Guys, the number one place to invest is somewhere that's had gone through a disaster of recent times. It's Townsville, right? And I want to say at this point in time too that we're sorry that we really are that a lot of our friends up there in Townsville have suffered greatly through the floods it did only affect a smaller percentage of the city than people might think, around 15%. But it was devastating, right? But out of devastation comes huge opportunity. Now, this city, we were already building in because it's the start of the cycle. And I'm going to talk about a little bit about why it's at the start of a cycle and what's to come in a minute. But what you find is it had a massive infrastructure boom coming. Now it's got a massive construction boom starting now, and will do for some years, to actually fix, renovate, bulldoze and rebuild some 2,000 homes. And it's shocking that those people have had to go through that. But out of that disaster comes huge opportunity, and not just for investors, guys, for businesses that are up there in retail, in construction, in industrial, even tourism will benefit from the the new redevelopment of the town centre, which was in planning, but some of that has probably been fast tracked now. There's so much going on in Townsville. It's quite incredible when we actually break down the figures, the numbers. Just to give you an idea, so this is Townsville, right now. So it is perfectly primed and positioned. There's an S in there, sorry guys. For huge capital growth, huge cash flow, and again, we can write off the tax by building the right properties, maximise our tax write-off, okay? It is primed now because we have some around 24 billion in infrastructure to come, right? Around 8 to 9 billion of that is fully approved. Now, to put that into perspective, how much would you have to be spending in the billions on Sydney, Melbourne or Brisbane to be equal to that 24 billion proposed, right, over the next 5 years to 10 years? How much would you need to be spending? Probably around 200 billion in Sydney to be the same per capita spend. It is enormous, but now we have a construction boom, right? Construction boom happening now. We have vacancy rates that only 2 years ago were around 8%. They went down to less than 3% just before the floods. Now we're at 0 because they just can't build houses quick enough. They don't have enough accommodation. Our property's under construction now. They're asking us how fast can we finish them, because they need accommodation. They're happy to pay $100 a week more, sight unseen. None of these houses that we're building, incidentally, were in the flood zones. None. There's about 10 or 12 under construction for our clients up there. You could drive down the streets during the floods. The biggest flood, they say, in 500 years didn't get affected. I don't know who they asked for that. It must have been the Aboriginals, because we weren't around back then as a country. But even 100 years, it's extraordinary. We went through that unaffected, right? Because we do our due diligence and research on the ground. We have a location matrix system, a point scoring system out of 100 that enables us to pick the eyes out of everything, and economically, from an economic view, from a data and stats point of view, to identify the best locations. And then we put in place the best builders, and we project manage with those builders to make sure your outcome is as good as we can possibly get for you. That's our simple yet proven formula that's helping hundreds of clients gain results like this or way better. I see Townsville gaining better results than these guys, I really do. And we're talking billions in infrastructure everywhere. I mean, private and public sector. We're talking, somewhere around the 2 billion when they're finished redeveloping the town city along the Ross River. A stadium under construction at the moment. That's some 400 million. We got the entertainment centre proposed to be built. Well, not proposed, it's actually approved to be built beside the new stadium. And that's another almost 400 billion project. We have the Twin Towers, Hilton Twin Towers, to be built on the other side of the stadium, and that's another almost $500 million project. So these are massive projects, employ a lot of people. And then we've got, they've got on their planning, town planning, art and cultural centre further down in towards the city centre. I don't know what that is exactly, guys, but that is a major project as well. That's just the town centre. Then we move around to one of the biggest ports in Australia, Townsville City Port, where they need to dredge the port, dredge the harbour into the port so that they can bring in bigger ships that can take more cargo away because it's so busy. They need to renovate the port, make it bigger, make it wider. This is a major project as well that has to happen. Some $2 billion when it's finished. Major employment hub, not only under construction but continuous. That's what we like to see, so continuous driving jobs through Townsville for years. Then we've got one of the top 10 universities in Australia, the James Cook University, with a $100 million extension, a new maths and science wing proposed to start sometime in 2019. We've got the biggest Air Force and Army base in Australia in Lavrix. $2 billion to be spent on that Air Force and Army base just by the Singapore government, because we're going to be training 14,000 of their cadets on rotation every year, along with Rockhampton Army Base. That's a massive amount of cadets through there that need accommodation, so construction's just starting for their accommodation quarters now too. So that's massive infrastructure jobs into the Townsville economy. Then we move on to solar energy. They're building solar energy farms up there to the value of $5 billion in the Townsville area, right? 3 of them are already operational now, and the biggest one, I'm told, has got over $1 million over $1 million solar panels. So massive solar farms. So that project's huge. They're also fully approved a water, piping water from the Shire of, Burdekin Shire. They probably won't need that now after the floods, right? But that's a $400 million project that's going to take years to complete. That's already started. I mean, these are major projects in Townsville itself. There's extensions to the hospital. There was an extension that's just finished to the Mater Hospital. There's also upgrading, renovations or redevelopment in the pipeline for Magnetic Island to boost tourism. Guys, I haven't even talked about mining, and we're talking billions and billions of dollars in projects, all right? Mining, 2 of the biggest mines in open cut coal mines about 3 hours southwest of Townsville would obviously have a major impact on Townsville as well. But we don't even need to rely on any of that, right? There's enough work in construction, in infrastructure to drive the place forward. The floods were a disaster, as I said earlier, but out of that comes huge opportunity. We now have a construction boom. We have vacancy rates that went from 8% to less than 3% in the last 18 months before the floods. Now after the floods, obviously they've got zero accommodation available. The vacancies are 0%. We're getting rang up by builders, developers, property managers saying, when will your houses be finished? Because we've got 10 under construction up there. As I said earlier, none of them got affected by the floods. We do our due diligence, we do our research on the ground very thoroughly, and those properties are safe with zero damage. And they're taking advantage of this opportunity now, where rents are going up $50 to $100 a week, sight unseen, guys. And we're building purpose-built houses to take advantage of what we need. The university's screaming for more accommodation, so we have a development close by that we're building in there, and we're building purpose-built houses. We design and build with the right inclusions, the right design, to maximise the outcome for you, our client, for our clients, and hopefully you become that. To actually accelerate their capital growth, their cash flow, start replacing your income sooner, guys, with real proven track record of a formula that absolutely works, right? We know it works. We're doing it over and over again around the country, and Townsville just happens to be in the perfect location now to take advantage of this. We're seeing business confidence up. We're seeing retail. A lot of these shops are starting to improve, not just because of the floods, but before the floods, right? We're seeing construction go through the roof, infrastructure, government employment accelerating. We're seeing them spend money on Lavrix itself, the Australian Defence Force, not just the Singapore government. We're seeing huge infrastructure, new development by Lend-Lease, and we do a fair bit. Hello to Lend-Lease, if anyone watching. We do a fair bit with Lend-Lease around the country, and some of the major developers like Stocklands as well, and some of those guys, where we get in at the right time. We get a good price on land. We pass it on to clients. We get wholesale. We pass it on to you guys because we're timing it perfectly. Okay, and that gives you that make money up front. It's so important for you. There's so many elements to making money right up front, putting you ahead of the game and actually running along, not just treading water, guys. You're also buying into locations where there's mostly mum and dads building big family homes, spending more than you, accelerating your wealth potential, accelerating your cash flow, accelerating your capital growth potential. Why? Demand's higher, it's a nicer area to live, it's lifestyle driven, it stacks up really well on our matrix. You get the benefit of that. Okay, and it's not just Townsville. Townsville's number one now. We have a couple other cities stacked up that are just behind Townsville, primed and almost ready to get into, that we'll be building in the next 1 to 2 years, that you can take advantage of too. So don't think we're just in one market. There are multiple cities that we go into, but they must have all those economic drivers. They must have all the economics and stats stack up, and they must be areas that have multiple industries, right? Multiple industries, multiple drivers. And when it's got that, then we look at the micro, really drill down on the best locations within locations. So it's not the macro, that's the starting point. It's the micro that's really important. And you can't do this yourself, guys. You really can't. You don't have the time, the experience, the expertise, the knowledge, the connections, the builders. Because what we do is we partner with builders when we don't build ourselves. We are builders as well, right? Here in Canberra, we build. But we partner up with builders and we project manage. We do a lot of their work for them and let them focus on the build. So they're working for us on behalf of our clients. We get paid a small percentage of that build. You don't pay any more. We don't charge the big commissions. Another major benefit to you making a lot of money up front, okay? And as I said, we get the right designs, inclusions to maximise everything we do for you. Right? Tick more boxes, get a faster result, start replacing your income, build wealth today, not worrying about it down the track in 10 or 20 years. Right? Start today to take control of your financial future. What is the next step? Well, the next best step for you guys is to contact us for a strategy session. You can do that by clicking on the link. You can do that by emailing us or phoning us. Set up a strategy session, complimentary the first one. Why? We want to get to know you. We want to know how we can help you. We want to look at your timeline, as Peter said earlier. Where are you on that timeline? How long you've got? What's your end goal? So we can work out where you need to start. What's the best property for you to accelerate what you're doing and maximise those returns, right? So we're not charging for that, and we're happy to help everyday Australians. That's what it's all about. Otherwise, I'd be just building full-time, guys. I wouldn't be doing this, but I love helping everyday Australians, and even on a lower income. Guys, believe me, you can still do it. Forget about the jargon out there about not being how to borrow. You can borrow. You just need the right plan, the right strategy, and the right budget, okay? And that plan we help you put in place. So contact us, take advantage. Tony from PPA, keeping it real yet again. Thanks for listening.